But today's big news, of course, is that the unified tariffs have been announced, although the effective date has not been announced for gas. We just had the PNGRB chairman, Mr. Saraf, with us. We now have an expert on the entire area itself, Jal Irani, Senior Vice President, Institutional Equity Research at Edelweiss. Hi, good morning, Jal. Thank you very much for joining us. Now, the chairman seems to indicate that it will be effective in a quarter, probably April 1st. So, who are the winners and losers initially?
So, I think clearly the winners are the gas pipeline companies such as GAIL and GSPL, because while it does not, while this clearly states that it does not change the pipeline tariff at an entity level, so whatever tariff GAIL or GSPL is currently earning or is if they should be earning in the earlier regime, will continue. So while the tariff does not change, there is a significant opportunity for volume increase in the longer term. So that's a significant potential gain for the pipeline companies. Now, gauging from various open house discussions which have been held earlier, the other supporters I sensed in terms of industry of this regulation coming up, where the LNG terminal operators, where gas will now become very fungible across LNG terminals and will find a market in sort of deeper geographies. The upstream gas producers, which could potentially get a better price as a result of this. Gas exchanges and gas marketing companies. So these are essentially the list of positives that we sensed. The potential sector which was mixed, we sense, was the power sector, one did have in the open forum discussion earlier about a month back that some of the zone 1 customers such as fertilizer, the customers which are close to the existing wellhead or the gas source, would be potentially have to pay a higher tariff, such as the fertilizer sector.
Well, I just want to break it up a little bit. I just want to break it up. You've spoken about many names, so let's take it one by one. You said it's positive for companies like GAIL and GSPL because it means higher volumes for them eventually. But stocks like GAIL have already run up about 25% in the last 1 month. You think a lot of the good news is in the price, and any upside targets that you would have for companies like GAIL, GSPL, etc.?
So, see, there are a couple of things. One is notably GAIL is actually an energy conglomerate, and so it's not a pure play on the gas pipeline business. About half of its profits comes from the gas pipeline business. So part of the earnings increase will come from also higher oil prices. So the higher the cost does not necessarily is while its product prices go up. So it's actually a leverage play on oil as well. And as you know, oil is rallied so as you are aware, oil is rallied by 25% in a month's time. And given an OPEC meeting coming up on 30th of November, we may see a potential further rally. So GAIL is rallied for other reasons as well. Of course, the pipeline unified tariff has also been in the making, so some may be in anticipation of that. But to answer your question, we would think that especially in the longer term, because this is a volume growth story in the longer term, as the gas becomes more fungible, that we are talking about a terminal value increase, and that in fact takes time to percolate through into the stock price as investors. It sinks in that the terminal growth rate of these companies have material increase. So I would think that these companies should be strong performers on a sustainable basis, rather than I wouldn't worry about in the short term how much it's risen or will rise.
Okay, but you wouldn't want to sell on MGL and IGL because they have to pay a higher price right away?
So let us understand that for the consumers, while different consumers will be benefited and some may be hurt, but in the case of the CGD companies, even if there is a tariff increase, notably this pipeline tariff is on an average barely 1/7 of the actual selling price. Now, if there is some increase on that 1/7, that also will not be very significant. And the likes of MGL and IGL, their CNG price, which is gas sold to cars versus diesel, is half the cost of diesel and is about 62% cheaper than petrol. So if there is a shift in competitiveness from 50% more competitive to 48% more competitive, you and I are not going to change our decision to buy a gas car versus a diesel car simply because the difference is changed by 2%. So I think for the firstly it is not going to be universal for all companies, and it may actually not increase for all the companies. But also what is important is that notably the fungibility of the gas in the longer term and the size of the pipe itself, because of higher volumes flowing through, 5 years, 10 years down the line as the national grid builds up, will be much larger, and then the longer term cost will fall for everybody. So then it's a win-win situation for even the guys in the near term who are potentially hurt at the margin.
All right, we got that. Jal, thanks a lot for stopping by. Have a great weekend. We will speak to you in a bit. For now, it's a big boost to gas consumption companies, and names like GAIL, GSPL could be beneficiaries. Let's take a quick break.